Hello, hello, hello. So today is July 1st, which means we're going to recap our Roth IRA portfolio in Robinhood for the month of June. We can see currently that we're at $19,629.65. That's the highest this has ever been. I set a preemptive goal in our last episode when things were looking a little more pessimistic that by the end of the year I'd like to hit 20,000. I said that was doable off contributions alone, assuming no gains. Well, it looks like that contributions aren't even that important for that goal. So we're coming up on it very fast. We're coming up to 20,000. So hopefully we'll be able to see that within the next month. If we stay stagnant, our deposits alone will hit that point. So that's very exciting. But if we go up, it might hit there sooner. We're not going to count our chickens before they hatch, but nonetheless, very excited to see that. So let's look at our results for this. So we have that today we're down about 0.5%, $109, overnight trading up 0.1%, $20. So down a little bit for the day. But if we look at the week, we're up 1.63%, which marks $315. Great to see that. Look at the month, we're up 5.68%. So this month has been incredible. That's $1,054.80 solely worth of gains. So that's amazing to see. We love to see that progress. If we look over the last 3 months, up 13%. And we'll look at the macro trend, but this is that bounce back from the tariffs causing the whole market to crash. So 13%, $2,260 in 3 months. Year to date, 7.6%, which this is kind of more the metric I care about. How is the S&P performing from the beginning of the year? Because we like to talk everything annualized. And seeing that we're in July now, we're at 7.6%. We're well over the threshold we need to be for on pace of a standard return, which is 10%. So happy with where we're at. If we hit 10%, that alone will carry us up to $20,000 in valuation. So very happy to see that. Look at 1 year, 13.31%. And this is where we see that trend where we were doing really good, riding high into the middle of February. But then tariff news came and quickly crashed everything. And then it continued to crash everything as escalations with China continued. So yeah, that brought us down a lot, and things were looking bleak, but at the time we capitalized. We put extra $500 in, bought some Google position, and then got into our index funds too. So I felt like we did really good because we're teetering at all-time highs on the S&P and QQQ both. However, we're at all-time highs in our portfolio, which means that we bought at a lower price average than what other people probably did. So that just shows that we're doing good. We're buying at the correct times, and we're buying into the correct things. So all-time high on portfolio. Love to see it. If we look at our all-time progress since we moved over to Robinhood, that's a 20% gain. So we'll get further into the long-term recap of it, but this is great to see. So let's look. We have $800 worth of contributions for the year. That's $24 worth of free money from Robinhood. And this basically is offsetting that cost Robinhood Gold. I get a lot of benefits with it, including that $1,000 free margin, which I just put in treasury bills. So a lot of things like that. It's all paying for itself. I have zero concerns with it. Don't even think about it. Some macro trends we got preemptive deals with China when it comes to tariffs that it seems like we're getting a better deal than they are. However, a lot of things are up in the air. Negotiations are always ever evolving, but the point being that things are moving in the right direction. Another thing happening, Jerome Powell, the head of the Federal Reserve, the people that set these interest rates in motion, which have a lot of effect on the stock market. His replacement time is coming up, so Trump is kind of flown the idea of other people. And the big idea is that once Jerome Powell is replaced, he's probably going to be replaced by a yes man that will be lowering the federal fund rate. So that would help companies in general. But the debate is if the economy is ready for rates to come down, which I think maybe ready to come down, but at a lot slower of a rate. Trump's calling for a 1% decrease. That's crazy. Maybe a quarter point, half a point if you're feeling really ambitious, but a full percentage is quite a bit. So let's get into some individual stock news. We can look at Tesla here. Tesla had a tough month. I'm not sure how they fared month in general. Yeah, okay, so down 10%. And now for Tesla, that might seem like a normal month, but they were flying high. So they were flying high at up 5%. And then they went down to negative 10%. That's a 15% difference in stock valuation. Now, where'd that come from, right? It seemed like Tesla was on top of the world post-Trump election. They couldn't do no wrong. They were just flying high, doing great. You can see year to date we're down 22%. So what happened is the question, right? Well, what happened is that there was a falling out between Elon Musk and the president. So between that, relationship soured, and something that everyone thought would happen, and Tesla might have seemed in favor of it even happening, did happen, and that's the removal of the federal tax credit for EV purchases, and that's going to start in September. This was passed in Trump's big beautiful bill, big tax cut, trying to reduce some of the things causing our deficit. Controversial in its own right, but the point being, in relation to Tesla, is that they're losing a lot of revenue because they rely on these tax credits. Looking at their Q1 results of 2025, they had $409 million in net income, and $595 million were from EV tax credits. Now, if you were to get rid of these tax credits, they're operating at, gosh, what is that? Almost $200 million of loss in a quarter. So, annualized 800 million. Oh, getting close to that 1 billion point. Yeah, not things you want to see, especially because I keep saying Tesla's overvalued. People are expecting high growth rate. It's not quite there. There's a lot of concern. People are pricing in high growth, but we're getting mediocre, if any, growth. I mean, EU, it's losing traction. We are getting things like their self-driving autonomous rides starting in Texas, so that's interesting. There was a couple hiccups, it seemed like, but no crashes or anything, so that's good news for them. But even then, they were making kind of goofy errors, so a lot's up in the air on them. Another stock which I wanted to highlight, something for me to look into personally more, is Oracle. Only reason it caught my eye is if you look at the chart, it's been just flying high year to date, up 30%, 1 year 55%, like a 5 years up 305. And let's see when this was listed. So this company was listed in 2000. So 25 years on this company. And I mean, if you look, it's grown 9 times. So that's no number to scoff at. But why is there so much growth recently is the question. So I looked into it, and I'm going to look further into the stock for some future videos, but they have a multi-cloud service, and the revenue is up 100%. So that shows that high growth is occurring for the business. So when growth occurs fast, that's going to raise up stock price. But also, they're just working on developing this sector. They're working with Amazon Web Services, and they're building their own data centers. So they're going to provide cloud security and cloud solutions for companies, storage of data, encryption of data, security of their servers, all these things which are becoming incredibly popular. There's a data center being built near me. It seems like these things are popping up everywhere. So they're very important. A little taxing on the energy grid, to be quite frank, but for these companies, they're needed. They are a great investment. I mean, their return on investment is great. Simply, if you spend money on a data center, it's going to pay off for your company. So Oracle is developing these data centers. They're gaining contracts very fast. They're up and coming, new in this sector. Really, they're kind of building that traction. So a lot of people have their eyes on Oracle. So it's something I got to keep my eyes on. Honestly, been slacking this month a little bit, but Oracle is very interesting. I like to see that. Something I always like to check is Robinhood. Mainly because I bought this when it was so cheap. Gosh, I don't even know. Yeah, we were at like $40 when we bought it, so it's over doubled that. Yeah, definitely paper-handed that. It came out early, but I'd have to reevaluate the current valuation. However, they're up 300% in 1 year, which is 4 times the value. So that's a lot. They're growing very fast. Question is why? And this is something I talked about when I did evaluation on it. They're taking market share like crazy. Quite frankly, their competitors like M1 Finance, Webull, Vanguard, Ameritrade, all these places which were competing with them, Robinhood basically pushing to the side said, hey, we're going to do our own thing, and we're going to do it great. We're going to be revolutionizing the investing industry as a whole. We're going to be bringing all this new technology to it. And basically, their whole shtick right now is that they're providing luxury services to the average investor, which is something that is appealing in nature. We like to see that. Now, we had some recent news with Robinhood. They did like this, their first crypto summit, and the big thing was tokenization. Now, I'm not a big crypto guy, but basically tokenization, from what I was gathering from their speech, is claiming ownership rights by minting tokens, and then when you would sell something or revoke your rights to it, it is then destroyed. That token that was minted. So it's Minted and then relinquished, basically, is the idea of it. So they're going to use crypto tokenization for buying all kinds of things. So they're going to have ways for people in the EU, for example, to buy into the stock market, not directly through things like standard ETFs or individual stocks, but rather through tokenization that represents these equities, which is very confusing and it seems like a roundabout way. Quite frankly, they're doing this, one, because it looks good to them and it's going to bring a lot of people to the platform. But two, it's a way to work around regulations in other countries like the EU, which are heavily regulatory, and Robinhood has been struggling to break into. So it's a roundabout way of doing it, but also it might be a little cheaper to do transactions this way. So it could be revolutionary. It's very interesting. Another way they are using this tokenization is to effectively allow average investors to buy into private equity, something that a lot of people have been wanting to break into. Private equity is private. It's called private for a reason, right? Not every investor can get into it. You need a high amount of money to be considered an investor. A lot of these aren't even open to the public. So through crypto tokenization, they want to make private equity available to the average person. And the example they used was SpaceX. Very popular, right? You can invest in Tesla, but you can't invest in SpaceX, which some people are bullish on. SpaceX, it does great things in its own right. So some people want to invest in that, but they don't want to go through expensive means or they don't have a lot of capital. Crypto tokenization is kind of their way of breaking into that private industry. So more options for buying equity is more revenue for Robinhood. So in general, people like this. This is good news. We like to see this. So again, Robinhood need to take another look at it, but I'm loving what I'm seeing. They just continue to just revolutionize investing, quite frankly. I mean, they got a stink to the company, with GameStop and everything that happened in the past, but it's really hard to deny what they're doing. Now, another thing to talk about is perpetual futures. They already added general futures of commodities, indexes, and other things to their platform. They want perpetual futures. And basically, that means there's no set contract date. You don't have to exercise these contracts at any given time. Simply, you're in there. And what's good about that, and something that is interesting to me, is this means you don't have to exercise it. Which, yes, you don't have to worry about a date coming up. You don't have to worry about that margin slapping you, basically. You can just sit in it. And additionally, futures allow leverage. And leverage can be a double-edged sword. If it goes down a lot, you're really screwed. If it goes up a lot, wow, you're just banking. So I think leverage, it's fair for a smaller part of your portfolio. And something I'll look at, I think I would leverage either something like the SPY, if I could just, buy the index fund for the S&P. Or I would leverage futures on something like micro gold contracts just because they're cheaper. And gold generally does go up because of inflation alone. So if you can bank off inflation and you have leverage with that, if you're leveraging against inflation, I mean, that sounds great to me, right? But maybe I'm just oversimplifying it. There's the cost of, borrowing margin, of course. So we'd have to see about that. But very interesting nonetheless. And yes, revolutionary. I'm going to continue saying it. I think that's just great to see. So now that we've gone over a lot of stock market news and what's been going on, let's look at our investing account. Looking at our overall view of our portfolio. So we have our chart here. On the green, it's the balance. On the red, it's our cumulative contributions over time. And the blue is the SPY comparison of where we would be. So we can see, up and to the right? We love to see that. But the point is that it wasn't always like that. We can see for the first year I invested, we were basically stagnant and underperformed the SPY, which we'll get into. But yeah, for a long time we were struggling there. So we kind of found our way eventually. And of course, the market's been rallying like crazy. And we've been putting more money into this account. So up and to the right. Love to see that. We look at our portfolio profit. We're at an all-time high here of $6,264. Before that, our all-time high was $5,300. So over $1,000 more of profit than we've ever seen. And again, up and to the right, we can see the moving average here has just been steadily going. Although there's dips here and there, it's been going very well. And what I really care about most of the time is the difference between the SPY value and our value. So if this number is positive, we are outperforming the SPY. If it's negative, we're underperforming. Initially, we were underperforming pretty greatly. I was just in some random retirement funds that M1 gave me. Missed out on a lot of gains. I was messing with stock trading because I thought I just could figure out which one was undervalued. Not quite that simple, a little naive, but the point being is that we were underperforming until the middle of 2023. Really started looking into it, took a higher beta approach with QQQM, QQQ, and got an S&P. And in general, that has performed very well, and a couple of picks here and there have also done well. So, love to see that. If we look at our positions, we have QQQM and VU, their respective equities and shares. Cost basis, of course, has been going up over time. However, we tend to buy in at really good times, and that's why we're at an all-time high in our portfolio. So, profit on QQQM currently is 2,900, VU 1,500. Between those two, that's 4,400. However, overall, through the whole time we've invested, we're at $6,663.92 at profit. So, love to see that. The position weight, it's where I want to be. VU at 40%, QQM at 60%. We're pretty close on that, not bad. Have to buy a little extra VU, it looks like. But we also do have a VU dividend reinvestment coming up tomorrow. So that will hopefully help it. But yeah, no, I'm very happy with that. Again, it gives you a little more beta exposure without also just, I don't know, ripping into me because I can't always take the beta. But yeah, no, I'm really happy with that. You can see the SPY comparison. We're beating it by $400. That feels good, especially considering the size of our portfolio and how long we've actually been trying to do something like that. We got our closed positions. We talked about Robinhood and Crowd, Strike, Google. Again, we kind of talked about, but we pulled all that position at a 0.97% gain and 141 overall days held. Not the best, right? That's a 3% return annualized. A metric I'm going to kind of look is have that first purchase date and then the closure date and compare the S&P annualized return during that time to our annualized return. You can see Robinhood and Crowd obviously outperforming, but Google during that down period, did we outperform? Yeah, there's a good chance, but we also, I think, made a good call pulling out of it because it hasn't been performing crazy. And then something I've been working on is predictions. So there's the prediction markets on Robinhood that I have been messing with, and I got all my positions up here. I like to hedge my bets a good amount, so I have a lot of positions, but they're all currently closed. There's no open positions, no real financial contract coming up, so I haven't really jumped into anything. I like the inflation data ones, I like the gas ones, and I like the Fed rate. So that's kind of what I'm looking at. They do have the hot dog eating one. Interesting. Maybe I can look at that, find some data. But the point being is these are all things that I can chart, I can make models towards, and I can compute expected values. So everything I do on this is a positive expected value play or a hedge against my bet. So I mix those two things together, and overall, I play with a lot of small money. You can see most I've ever had on one thing was, I had $26 that I got out of my shares, and maybe I spent like $24 or something on that. So again, very small money that I play with, but it has been proven good. We can have our running profit versus closure date over time, and you'll see we started at, what was it, $1.25 profit, and now we're up to $7.04. So it sounds like, nothing, but when you really don't bet with a lot of money, this is pretty good. I mean, we can see our annualized returns, and some of these are just completely off the chart. If I've ever hit on one of these, they've just been great annualized returns. I got nothing to worry about. The lowest being 27%. Oh no, 27% annualized. I'll take that any day. But then you got some crazy numbers for like my ones that were held one day, which is kind of what I look for around the inflation bets. Something I want to keep looking into on my downtime. So very happy with that. But overall, I think we're at a really great position. I thought last month was great, and it just kept outperforming. So very happy with where we're at. Love to share the progress. Middle of this month, I'm going to be shooting for releasing a video on the valuation of SoFi Bank, something that interests me, and I want to be doing my stock valuations on separate videos so I can maybe get some more views on those too. So thank you for tuning in. Make sure to share with your friends. Watch again if you're bored, you're just at work listening. But thank you, and I hope to see you guys on the next one.